Paul, Warren Buffett's been in love with Coca Cola for a long time. You and I drink Coca Cola like it's water. I mean,
drink Coke Zero like it's water.
Of course. And did you notice Coke Zero rebranded, much to my demise?
Your demise?
Surmise, whatever word I need.
I like the black can more than the red cans.
Of course. I'll get used to it, though. But Coke, we've talked about before, Paul. Last Christmas, you know, I always marvel at the fact that Coca Cola has somehow stolen Christmas. Santa drinks Coke. Damn it, you know it. If you had there's no Santa picture in the world with a Mountain Dew in his hand. That's never going to happen. And as the holidays come around, Paul, we'll have me dressed up as Santa drinking Coke. But we're going to look at Coke's financials today. We will head over to Mo and see if people are trading Coca-Cola. Mo, I'd imagine that volume is down. Warren Buffett loves this, but he certainly didn't buy it any time recently. He's probably had it in his portfolio for a long, long time. And so we should see if you're interested in buying Coca-Cola. Paul and I think it's the best drink ever made, and we will show you if the stock is the best price it's ever had, which I'm assuming maybe not, Paul. Let's get into it. Look at the financials, Paul. Go ahead, using 8 pillars, baby.
So guys, first off, follow us on Instagram. Marketing department tells me that it's the best thing that ever happened. If you want to see pictures of my dogs. All right, so Coke has a $236 billion market cap. 5-year PE, wowzer, 38.3. We want that less than 22.5. That's an X. Even last year's PE is only 30.
Ain't nobody got time for that.
Return on invested capital, 10.5%. That's good. We want over 9%. So that's a good thing. That means they're able to take their capital and make good returns on it. Look at this dividend stuff. So one thing is they pay a 3.8% dividend. Now, one thing I want everybody to remember, dividends, everybody assumes that the companies pay them and they're secure. But I want you to look at something. $8.9 billion in dividends paid.
Yep.
And look at their 5-year average free cash flow. 7.46. And that's with an increase in the last year to 11.5. So even if last year's free cash flow continues on forever, they're still eating up 80-90% of their free cash flow with that dividend payment. That's a lot. Okay, so just keep that in mind when you're looking at this dividend and get falling in love. Just keep that in mind.
Pillar number 3 is revenue growth over the past 5 years, Paul?
Revenue growth, 38.86 down to 36.41. That's an X. Now, they could have sold off parts of the company. I don't know what they did. But look at 10 years ago, $47.5 billion down to 36. Who would have thought that a brand like Coke would have declining revenue in the last 10 years?
Okay, I'm worried now. Profit growth.
4.15 to 8.08. Check mark. So their revenue is down, their profits up double. Why is that?
Weird.
Look at this, other income expenses. They have a lot of other income expenses. $1 billion, $1.7 billion, they lost 2, they lost 2.5, they lost 2.7. So they have a lot of other income expenses. You might want to understand what that's from. These could be from the sale of assets. This could be from writing down assets. I don't know.
Are you still drinking like 4 or 5 Coke Zeros a day?
More than that.
Oh boy, okay, keep going.
Shares outstanding, well, we have to go to the end of the previous year. It's actually 4.32 down to 4.31. That's a check mark there.
Okay.
Barely a check mark. So guys, this software I created because our people who were watching our channel kept saying, hey, how do I get this data? So what I did was I hired a bunch of developers and I paid for a bunch of data and we created the software. And here's what you get with it. You get a mobile app. Everything you're going to see on this video is on your phone, mobile phone. 8 pillars, over 30 years of financial data, stock analyzer tool, daily content that we put on the app and the website only for our users, access to all of us, real estate calculator, the entire community where you guys can interact and talk and get to know each other. All of this for only 90 cents per day. So if you are serious about your investing future and your retirement and making more money, it's 90 cents a day, less than a crappy cup of coffee. You get all of this while our competitors are $200, $235 a month. And as you can tell, you don't get anywhere close to it. Go to everythingmoney.com, click the link below, and get the software 90 cents per day. This is a no-brainer.
Berkshire Hathaway bought Coca Cola in 1988. It's their longest held stock, and their cost basis was $3.25 a share.
Wow.
Isn't that hilarious? These guys are incredible.
All right.
Pillar number 6 is total long-term liabilities divided by 5-year free cash flow, Paul.
So what I do here, guys, I go to the 5-year free cash flow, $7.5 billion. I multiply it by 5. That is $37.5 billion. So my goal here is I want to see their total long-term liabilities less than $37.5 billion. So what do? I go to the balance sheet. I scroll all the way to the bottom. Not all the way to the bottom, but pretty close. $50.64 billion. So they have more liabilities than I'd like to see. Does this mean avoid? Not necessarily. I don't know what their liabilities look like. It's a starting point. The 8 pillars are a starting point. But they have more debt than I want because we want to see that number to be less than $37.5 billion. It's 50.6. Okay. So now we go to the free cash flow statement for our last 2 pillars. The first thing we want to see is, remember, free cash flow is cash from operations less your capital expenditures. I added this line that no other financial statement has in the world to tell you the free cash flow instead of you doing the math. So that way you can easily access it. 6.31 to 11.5 billion, that's a check mark. With an average of 7.46. So my last step is I take this average, I multiply it by 20 to give me a value, about $150 billion. What this means as a starting point is I should be willing to pay about $150 billion on average for a company like this. The current market cap is?
236.
236, that's an X. So, now one thing I will keep in mind though, if you looked at the PE, it was very high. So it kind of makes sense that it's selling for 236, yet we want it to be 150. So I'm going to do, after Mo's done with his charts, is we're going to go to Stock Analyzer tool, which is part of our software. I'm going to input all of my assumptions in the company, and it'll tell me how much I should be willing to pay for the company today to get a return on investment that I desire. Okay?
If trading interests you, and maybe you have a career where you might be able to devote some time to trading on a daily basis, you can trade in our Bidnast Nation, part of our Everything Money community. Mo is the fearless leader. He guides you to sticking to rules. And we've had some great responses over this past year, Mo. Gosh, Mo, you've only been not even a year. You've been on the channel. It's incredible what you've turned into, the monster we've created, Paul. Are people trading Coca Cola over there? Oh, look at that.
So here's what I'm noticing from this. This is back in February, and it really hadn't dipped below its 200-day moving average, except for the little bit of turbulence that we saw over the last week or so. But if I just draw a straight line across here of where it's came to, that's a very strong support level. So this, to me, is just an anomaly. I wouldn't worry about that. Actually, Seth, you mentioned volume in the beginning. They averaged 16.3 million shares traded per day.
Well, that's way more than I would have thought.
Way more than I would have thought, too.
Because this thing hasn't moved very far in many, many years, Paul.
Correct.
I mean,
and this is kind of one of those ones where you just put it in a portfolio and let it ride. But speaking of letting it ride, let's let this thing, maybe put this on a watch list, maybe buy a tracker share, something to that effect. Let it drift sideways. Eventually, this will pop into the sweet spot, and it'll make a charge towards $60. So again, you just need some good, consistent volume coming in there. I think that what you really have going for you is you're holding that 200-day moving average. So this is actually looking pretty decent, but just be patient and let the stochastic turn up for you.
Paul, I don't think Mo knows what "Let Me Ride" is. I think he kind of chuckled, but he doesn't.
You don't know what that is? What? Let me ride.
No, look at this.
There's a car full of girls and it's going real well or swell. Well,
Never heard of it.
Yeah, that's off the Chronic, 1992,
next
baby.
stop is the East Side Motel.
No, that's a different song, Paul.
No.
Yeah, it's a different song. We're talking about Dr. Dre's song. Yes, hello. Can't stop. Would you let it drop and
that's all. Let me ride. Isn't "Let Me Ride" also?
Now you're thinking of
Isn't that the same song?
Different song. Different
no,
song.
but don't they say it in the same song?
Regulators.
Regulators. Don't they say? Oh,
maybe.
Let me ride.
It's a Dre song though.
I think they do say
before
Mo
was born. No idea what you guys are talking about.
We're gonna get a lot of hate in the comments now. People are like, Paul doesn't know his rap music. All right.
Of course we don't. Look at us. Go ahead, Paul.
All right, so guys, I'm going conservative on Coke. I don't know what to do here. This is a hard one. I'm going to probably do a couple assumptions here. Negative 2%, because they've been declining for the last 10 years, 0 and 2%. Share changes. I'm going lower on profit margin and free cash flow margin. Now, here's the deal, guys. This is where the big hit to value. PE currently of 29 and 20, and I'm going 12, 14, 16. Hit analyze button. We're not going to like this. $15 a share. Do I think that's low? Yes, I don't believe that number. I look at it going, okay, so let's say I want to change this to 2, 3, and 4% revenue growth. Analyze button. It's still high, but it makes sense that it would be lower because of how expensive the stock is. The PE is 29. Cut that in half. The stock's got to go in half to get there. $27 a share. I just look at it going, okay, what are they doing to increase their revenue as time goes on? I don't know. So this is a hard one. You found the data, you found the information, didn't you?
We don't want to get demonetized, but that's the song, baby. The Chronic. Oh my God, when that album hit. All right, that's our take on Coca-Cola. It's a no at the moment. A little smidge high, but we will certainly be filling our veins with that Coke Zero, Paul.
Can we just do one thing real quick?
Go on. Oh, you're going to see.
It is. Would you let me ride?
Oh, so
it's in regulators too.
My apologies.
In regular, where is it?
Bro, when that song hit, when we were
Right
like
here.
in
Would
eighth
you
grade.
let me ride?
Oh
I got
my
a car full of girls and it's going real swell. The next stop is the East Side Motel.
Check, please.
It should have never doubted you in that steel
knew
trap
it.
mind. So
I knew it.
fondle the thumbs up. Keep watching entertaining content from us and
Follow
stock
us on
analysis.
Instagram.
Yeah, follow us on Instagram because it helps us for some reason. So
Yeah, that's
see you
what
next video.
marketing tells us.
Yeah, see you guys.